Today I'm going to talk about a few things, okay? And most of this are things that I often say because I really believe that the more we talk about it, the more it becomes easier to understand. If you remember when you were at school or college, when your teacher would teach you something, uh, I mean, the next day you would forget 90% of it. So it's to retain, we got to hear it again, hear it again, okay? And so the thing for us is to understand that the investments in the stock market is something that is really important in everybody's lives. It is a very important way of investment. Okay, most Indians don't invest in the stock market. They prefer either into property or gold. But the truth is that those are investments that will take a long time to mature and grow. The stock market would give you a quicker return over a longer period of time. The same period of time, it will give you a better return as well. And so it's really important for us to diversify and make sure that we also invest. Roughly, it's about 12 to 13% of Indians who actually are invested in the stock market today. Look towards the Western countries, it's about 85 to 90%. So it's the inverse ratio, you see. One eighth or one seventh of the people in India invest, whereas over there it's seven eighth or six seventh of, right? So it's important to invest. Now, when we invest, the thing that we should be very clear about is that this is something that we're planning to do for the long term. Okay, a lot of people would monthly or annually put in some money and gradually grow their portfolio, and it's important that we think long term. Many people come to the stock market thinking that they can make a lot of money very quickly and become, a billionaire or millionaire or whatever. Yeah, I'm not saying that's not possible, but the truth is that that is something that would happen to maybe maybe one out of 200 or 1,000 people. It's not that everybody will become like that. Okay, so it is important to know that, hey, the chances of me getting rich overnight is not so great, but the chances of me growing my wealth over a long period of time is good. Okay, so that's the second thing that we have to understand. Our mentality and our psychology is towards a longer period of time, and not to get instantly rich, but to grow our wealth over a long period of time. Thirdly, many people would often buy some a stock that they've heard the news about, and they get in without checking fundamentals, without checking technicals, and they go with the news that they hear, and oftentimes that does not work out. It might work out, but oftentimes it does not work out. What we really need to do is to do our homework, and the homework that I'm talking about here is to study the fundamentals of the company, and also how to use the charts, technical charts to figure out if the stock is ready to move. The thing is, because oftentimes a stock that we invest in, it might take it might take a while for it to move. And why is that? Is because oftentimes the fundamentals of the company might be good, but we are not looking at the technical charts. If you simply invest into something without studying technicals, we it is going to be difficult to predict when it will move. Technicals really help you to understand, okay, there's a possibility that the stock will move, and it's a good time to enter. Okay, so that's just the preview that we need to talk about. Now let's look at how do we figure out what stocks we want to invest in, and how do we use technical charts to figure out whether it's a good time to invest in. So the basic concept of what stocks we invest in is the fundamental side that we got to look at. And that, as I've told you before, something that we can look at through ticker tape, right? So if we go to something called ticker tape, and this is here, ticker tape is the site that I use to figure out what are the fundamentals of a company, right? I also use this to screen out, what are the stocks that I want to potentially invest in. So starting off in ticker tape, I usually go to something that I've already set up, and it's basically like I've told before. If I just take this as a new screen, if you look at this, there's about 4,700 stocks that are available on the NSE and BSE combined, okay, the National Stock Exchange and the it's very difficult to track all 4,700 shares, right? So the thing that we do is that I don't need to track every stock. And that brings me to another important point that we got to consider. And that's called FOMO. Okay. The thing is, and most people will track everything because they think if I miss out on that, I'll never get another opportunity to enter something like that. But that's not true. The truth about the stock market is that it constantly gives us opportunities, and it is up to us to figure out what opportunities to take. If you go for all the opportunities, you might not get any of them because that's how it is. But if you are targeting a few things, it works out better. Okay. So here's the thing that I want to share with you. So what I do for myself, and something that I would encourage you to also do, is pick out the top 500 shares in the Nifty, and that is this something called the Nifty 500. It's the basket of the top 500 shares in the Nifty. Out of 4,700, I brought it down to 500. And now these 500 shares are, decent. Not that all of them are fundamentally strong, by the way, but they have the largest market cap, top 500 stocks, and most of them are decent or good or very good companies. They're more or less fundamentally strong. Not all of them, but most of them. So it makes my target audience or target group a little more concentrated. Now, once I have this, what I really look for here is I'm someone who loves to invest. That's the stock market list down the top 500 in that in the order. No, if you go to ticker tape and okay, so I'll show you how to get this. Okay, so if I go to ticker tape, this press screen, and I click stock universe, you can see that there is a Nifty. What's this? Uh, There's a Nifty 500. So all I need to do. One second. Yeah, so all I need to do is click that Nifty 500. It'll pull up the top 500 stocks or the 500 stocks that form the Nifty 500. A few other things that I do over here is I add also a filter called 52 week from high. This gives me an idea of which has fallen quite a bit. Okay. So here's the thing that we should understand. Healthy companies, they will continue to grow, right? But in the stock market, it's not always growth like this. It's a bit of what is it called? It's like a sine wave. Like it comes up, it goes up, and then comes down, goes up, comes down. But over a long period of time, this share value will continue to grow if it's a healthy company. The thing for us is to figure out where is a healthy company that has fallen down that I can get into. Because if it's a healthy company and if the share price has fallen down, the natural eventual result is that the share price will go. So that's what we're targeting. Okay. So once I have this, I also look at what's the 52-week low or high, and then I also look at the 1 day volume. Now, why do I do 1 day change in volume? I'll tell you why. It's simply because usually when stocks are about to break out on a technical chart, it should also be accompanied by a large volume. See, I'm not the only one who follows technicals. A lot of people, especially larger institutions, banks, and other companies, follow technicals. So when they see that there is a technical breakout opportunity, trust me, they're going to be buying in crores if they are particularly watching a particular stock, right? They're going to be buying in large chunk of volume. So normal volume, like say on a given day, this particular share A, its volume is say 100. On a day when it's performing a technical breakout, the share A's volume, number of shares that are traded on that day in the market, might jump to 200, 300, 400. So a few X times the normal volume. That helps me get an indication that, hey, this is successfully trying to break out. Just two things that you got to keep in mind. Now, if I want to look at all of these companies and say, okay, for example, if I were to pick any of these up, and let's look at, for example, Campus. Now, Campus has been on a downtrend. In fact, Campus is almost 80% down from its previous of its 52-week high. So the thing is, now if I look at Campus and I look at its financials, right? You see that the financials are more or less decent. Okay, you can check the financials, and you can see that it's a small company. It's growing decently, not excessively great, but it is growing. It keeps adding a lot of capex. That's why sometimes you see the profit come down because they're adding more volume. Okay, but this has been going through a bit of a down cycle for the last few. You can see that the total revenue has been kind of stagnant for a while, right? December 2022, that was a year ago when it probably was at its peak. And since then, it's been gradually coming down. Now, the thing is, otherwise, it is a healthy company. One day, the financials will show an upturn and it will start moving up. So now, when I look at this, it tells me, hey, this is a good company and it is down quite a bit. Probably, good. But should I enter it? Is the question. Because I can, if I want to enter it, I need to also look at volume and the technical charts, right? And that's where we got to look at technical charts for this thing. Okay. Now this is trading view, but you can use a lot of other websites which show you the technical charts. Basically, it shows you how the price is moving over a time frame. Like this is the daily chart, but I can look at it to see how it's moving the last, every 5 minutes, how it's moving, things like that. But for our viewpoint, we're going to look at technicals. We always take a longer term view. Okay. That's why I like to say that I would probably pick a daily time frame. And we're going to look at what constitutes, a breakout, what are resistance and supports and things like that, and why would I enter something like that. So this is Indigo Pay. So let me pick up, if we look here, I think Indigo Paints. Let me see. Let me see if Indigo is on this list. Yeah. So you can see here, Indigo Paints is like 9% from its 52-week high, but that's a bit of a misnomer because its last 52-week high was here. Okay. But if you look at the stock in its entirety, if I go back and look at the trade chart, this stock started trading way back in 2021, Feb 2021, and this was the when it came out for its IPO, it was priced around 2,900. Uh, and since then, it's been in a downtick. But now this downtick is something that we got to look at. Okay, first of all, this is the point from where it fell, right? If I were to draw a line, I can clearly see, hey, it made a technical breakout at 1,264. Now it went and then consolidated here, and that's where I drew my line, which is basically these resistance. There was a whole bunch of time when it would sit and stagnate. Okay. I'll draw this for you to be a little more closer and understand. Okay, from here, if I were to draw this, okay, you can see here now a couple of things. Okay, this is showing you how a technical breakout can be determined. Hmm? Uh, Now this is something called a triangle pattern. This formation here. So basically, it went to a high of 1,538, and then it fell down, and then it tried to go up again. It came to 1,539, fell down again. Sorry, not 539, 5,500, and then it broke out. See this green candle here? This is where it broke out from this trading, this consolidation. Okay, oh, sorry. Yeah, it broke out from this area. Okay. Now, so when it broke out this area, this is probably when I first started investing in Indigo Paints. Let me see where Indigo is today. Okay. Um, so yeah, I bought it at 1,550. So it's in this area itself. Okay. So somewhere here is probably when I first started investing. Okay. And basically what I'm looking for is one, it's broken out from this larger trend line, right? This trend line that's all the way up there. It's broken out from there, and it's been again consolidating in this area. You see, this section is basically, this is called a sloping flag pattern. It's a basically a parallel set of lines, and it's been in this area for a long time. It goes up, it fails to break out, it falls down, and now you can see that it's broken out, right? So once I see this, that tells me, hey, the stock has potential to go up. Now, this potential is, not confirmed until you check the volume. See, you see this volume? For a long time, the volume was around these levels here. Okay? But on those particular days, you can see it has been gradually increasing in volume. And see the last day, this is this is 17 number, Friday. On Friday, it had huge volume. In fact, this sort of a volume hasn't been seen for a long time. So this huge volume has been added in, and now if it closes above 1,577, that tells me that it is good for an up move. Okay. So what are these things? Basically, I can match resistances and supports. Okay, so what are resistance and supports? If I were to draw on this one, okay, this is a resistance because it fell from here. Okay, another resistance, it fell from here. Another resistance, it fell from here. Okay, similarly supports. Okay, it came, it fell down, took support here, went up. Came, fell down, came to the support, went up. So resistance is from where the price will fall down. A support is from where the price will go up. Okay, and then you can see again, it came here and it fell down. Right? No, it came here and then it went up. So you see how supports and resistances, we can join these resistances and these supports. And when it breaks either one of these, it either means we can exit or we can enter. If it breaks above resistances, that means the thing is that can go up. If it breaks down from a support, that means the price can fall down, right? So what we've seen here is, one, it has broken out from this resistance. Okay, cool. Secondly, there is volume. Now, if I have not entered this share already, which I've already entered it, but if I had not, my next point of view is to see when will it break above this high. This one's high is 1,576. So say if it goes above 1,577, it's showing more strength. Because what has it done? One, over the long term, it has broken this trend line. Then it broke this trend line. And now on a shorter time frame, it's broken out this trend line as well, and it's trying to go up. So these are the ways we can look at and enter, particular shares. I can give you lots of examples. Now, these are the shares that I hold. But if you pick out a share and it's a healthy company, you can actually track its technical chart and then figure out if it's going to go up or not. Okay. So let me give you another example here. This is Varrock, right? Varrock is something that I've been holding since 340 levels. And I'll tell you why. Okay. So Varrock, you can see here, it yeah. Okay, look at this. This was way back in Jan 2022. Okay. And it came to this level, fell down. So this is a resistance. It came up somewhere here, it found support, it started going up, it came to this level, fell down again. So again, resistance. Went up, came down, then went up again, found resistance again, went down. So if I were to join these 3 points, I already have a trend line. Okay, trend line is this line which joins the points, either resistance or support. So if I were to look at that, I can see that here it's been making there was a resistance here based on that line itself. Okay, this was a resistance area. Now, if I look at Varrock on this is August 10, 2023. Okay, look at the price. That's about 350. Now, if I were to look at Varrock, I can see that I entered at 350. All right. So you can see why it makes sense. Do you see that 350? And here the price was around 350. Okay. So when it broke out from this range with a huge volume, okay, that's the time when I entered as well. Because this looked like it was going to be a breakout. And I started accumulating at these levels. Once it finished its breakout, you can see it went all the way up. Then it did another set of a consolidation here. And then yesterday, it broke out with huge. Now, look at this. Can you see these two green candles, these two large bars? See, that's a volume bar. Okay, compared to all the rest of the volume, that was huge. That was the day it broke out. And today, or yesterday on Friday, it broke out again from this consolidation. And you can see another huge candle that is showing a breakout. So you have to be able to combine these together to understand, hey, one, it's creating a technical breakout, and there is okay. Because just volume alone won't make any sense unless there's some sort of a pattern. And let me tell you, every stock which is healthy will form some sort of a pattern either to go up or a pattern to fall down. And if there is confirmatory volume, because it's a lot of larger institutional investors who are probably investing and things like that or exiting, you see a corresponding volume also, that is really helpful. So these are basic things that anyone can learn. It's just a issue of applying it. Okay. So let's for example go to a Nifty 500. Now this is the list of Nifty 500 stocks. Okay. Right. And now we got to learn how to do this. If we don't learn how to do this, we'll always struggle to make a investment, right? So let me okay, so I'll give you an example that I recently picked up. Okay, Alchem is a very recent example. I think I've explained this before also. Now look, I'll show you how much I have in Alchem. Okay, Alchem. Yeah, so I bought about 50,000 rupees of shares at 3,500. Today it's at 4,448. It's almost 26%. Okay. Now there are reasons why I entered. Okay, it's not simply if you look at this, I actually made an entry into Alchem a while back at 3,100, and then I exited somewhere here. So I made already a nice profit earlier. But I saw the same opportunity developing again using this time frame. You see the daily time frame. The high was 4,200 something. And then you can see that it's formed resistances. It fell, tried to go up, fell down from here, went up, fell down from here. And then in this area, it broke out from that. Okay. This is the technical indicator we're looking at, right? The technical chart says, okay, it's breaking out from this trend line. But after it broke out from this trend line, it didn't make a huge move that we would expect, right? For a long time, it was consolidating. But look at this. Okay. There are levels that we can look at. Now, this, if I were to expand this, you will understand this better. Okay. Check this out. Okay. Now, this is a level that was a resistance, right? Look at that value. This is something around 3,650, right? You can see this came to about 3,006, the high, 3,592. Okay, so it came to 3,592. So this is not 3,650, this is 3,600, right? Okay, and then it fell down from there. It came back here. It again went to a high of, well, no, that's yeah. Right. So here, now if you look at this, the high on this day was 3,649, 3,650. On 13th October, 3,646. On 18th October, 3,650. And this day, it did do a bit of a breakout from this level. Okay. And you can see 27th October, 3,650 was crossed. And then from that time onwards, once it broke out this resistance, this yellow line was the basic resistance there. Okay, it broke the trend line, but still it wasn't able to cross above 3,650. Okay, once it crossed 3,650, that is 27th October. Today is 18th November. So in about 3 weeks, it's gone from 3,650 to 4,400 and 25%. Okay, and you can notice something else. it wasn't doing this alone. There was, a starting of a volume spike here. See, what happened was once it broke out, the next day it started falling a bit, and again there was an up move. So every time it tries to fall, it's been going up. And once it took out this level, see this previous 3,700, you can see that again there was been huge volume spikes. So basic thing is to understand, hey, okay, Alchem, healthy company. Technically, it's broken out from this trend line. This is when I started accumulating 3,500, 3,550. You can see where I made my entry. Okay, 3,531. So that's basically this point when it started from here. Okay, 3,530. This level is where I started entry. Okay, and from that time onwards, it consolidated for a while, which can happen, but then it broke out and went up. Okay, so that is the basic idea that you can employ almost any stock, provided it's a healthy company, which you can look up fundamentally through ticker tape, and then start buying. You see, another thing, I don't buy all the shares I want immediately. I will gradually add. So I've been accumulating at this level for a while. So I entered here, I entered a bit over here, I entered a bit over here. So gradually, I've been entering. And then when it's gone up, at one point or the other, after I see a good return, I'll gradually sell off some. Okay. So that's the basic concept that we got to understand. And then it's a matter of applying it, into different companies. So let's just quick recap for you guys before I proceed. One, you got to understand that investing in the stock market is necessary because that's something that will give you a good return over a longer period of time compared to other sorts of investments, especially when you have to fight inflation. Also, if you buy a property, it takes a while for it to sell. All of that. This is not that like that. Stock market, the stocks that you buy, if they're good stocks, quickly sell. You can always get the liquid cash in return. All of that. Secondly, the stock market, you got to understand that you won't get rich overnight. It's a long-term process. It's for us to keep invested and stay invested. By investing into good stocks, you will get a return. Okay. And thirdly, that there is no such thing as FOMO. If you miss out this bus, the next bus will come along and you can take that bus. Okay. Now, with that cleared, we got to understand that we got to be selective of which stocks we pick and when do we enter them. So, which stocks we pick is the fundamental side. And to reduce the risk is why I look at the Nifty 500. You can even reduce it further, but the Nifty 500 gives us a lot of opportunities without, and most of them are fundamentally strong stocks. There are some stocks that are not so great, but most of them are fundamentally strong stocks. Okay, so we looked at how do we pick the stock, how do we make sure when do we buy it is when we look at the technicals, and for that is where we looked at trading view and we went through how we identify resistances and supports on the charts on a daily time frame. We can connect them using a trend line, and when we see a breakout and we look for volume, if both of them confirm, we can start accumulating the stock. And over a period of time, it will start to move up eventually. So we always look at value investing. We look for a stock that's fundamentally strong but has fallen quite a bit. We start looking for technical charts. We start looking for when there is a breakup. And if there is volume, a company start adding or accumulating the stock. And that's the way you can make money. I can show you umpteen examples. Now, if you notice, I had about 160 shares that I own. Over the last 7 months, if I were to look from April, I have invested into about 130 stocks. Many of them I have gradually sold or reduced and bought new and all of that. But out of these 130 stocks, most of them are in the green. Okay. I'm not saying all of them. If all of them were, then it would be something amazing, right? We never miss, we get everything right. But that doesn't happen. There will be some stocks that don't perform well. There are some stocks that have broken down and I've exited at a loss or reduced my position in it. But most of the stocks that I have bought over the last 7 months have done quite well. I've just arranged this to show you the best performance. I have some really bad ones too. Some of them I've made years before as well. So, but these are most of these stocks. If you look at here, you can see BSC, Zomato, I hope you can see this, right? Yeah. BSC, Zomato, Adani, Oro Pharma, Parag, MCX, Creative. Okay. Most of these were entered in the law. I think Adani Green is something that I entered, yeah, again in April. Sorry, in Jan. Adani Enterprises I entered in April. Oro Pharma I entered a way back. So that doesn't count. Okay. But if you look at BSC, I entered Zomato I've entered quite a while back. But BSC I entered during the last 7 months. Adani Power I made an entry in the last 7 months. Parag Mills I made an entry in the last 7 months. MCX I made an entry in the last 7 months. Creative an entry last 7 months. Adani Enterprises April an entry. You can see a lot of these are entries that I have made over the last 7 months. And a lot of them have given 20, 30, maybe even higher. Okay, not everything will give you a huge return. Sometimes I have booked some at 10%, reduced positions when it came 10, 15, 20%. But the basic concept is the same. Okay? And especially if there is a stock that is technically making a breakout, normally when the market falls, this might not even fall. Okay. So I've seen that even during when the Israel-Hamas war started, the stock market fell from about 1,000 points overall in a couple of days, and in 5 to 6 trading days. But there were some stocks that didn't fall at all because they were technically breaking out, and so people were still interested in buying them. There was good volume. They didn't fall. So that's the way we should roll. And how long do we keep these shares? If you look at some of the, I had bought Paytm a few months back. I've exited recently. But there are things that I've been holding for 2, 3 years. There have been things that I've entered and exited within a month or a 2 months time frame. It depends. Okay, it depends on whether again there will be sometimes when I can see a technical breakdown. Okay, and I know that this is a place where I need to close or stop holding the share or reduce the number of shares that I'm holding that particular company. So I'll do that.